Yeah, sometimes when we talk about this, my client will reply me saying that, hey, no, my agent told me this can up to age 100. I said, yes, the benefit renewable up to age 100. But doesn't mean your policy can sustain up to age 100. Because investment linked policy is trying to level your premium from starting to the end, so you get an average premium. But if your average at 150, which is too low, then it cannot sustain until age 100. It will lapse. Then before lapse, yes, you have so-called saving money in there, we call cash value. But when come to near end of the policy term, near lapse, you actually don't see any saving in there. It's a good for as a start, but not for whole life. You time to time need to review your plan and adjust, restructure your policy, whether adjusting the benefit, increase the premium, increase the cover, or adjust to separate the policy, things like this. You need to restructure. So a lot of people, they buy insurance, they will straight away tutup mata, and then, oh, I have my insurance and it's a bao ka liao policy, it's a damn good policy, still have savings and so cheap. And then 20, 30 years later, agent come to you saying that your policy going to lapse. So the moment you buy a medical card or a policy, you must actually understand the whole feature, how long it cover you, and along the way, what you need to do. Every 3 years, 2-3 years, you review your policy and review what you need to do on that, so that it's continue cover you. Just like when you buy a property, you won't leave it for 30, 50 years and ignore it, right? Your policy also same thing. You cannot be ignore it and just think that I have cover. A lot of people, their premium to income is only 5%, 5% of their income, or even lower than 5%, 3%. Let's say they earn 10,000 a month, then they spend 3% is 300 a month in insurance. Definitely is not enough. When you are doing budgeting, don't exceed 10%. But if you can spend up to 10% for your insurance, provided your income also got certain level, let's say 10,000, 10% will be 1,000. 1,000 for your insurance premium. You see, you already spent 300 to medical card. You still haven't looked at critical illness. You still haven't looked at life. Accident is a very low kind of premium, it's fine, but critical illness and life is another taken up your premium. So let's say you have 1,000 for these three things. That will give you pretty good coverage from young to old. Okay. And also when we are young, when we 25, 30, 40, up to 50, usually our commitment increase. We buy new house, we have more loans, we have kids, we have this and that. So along the way, your critical illness, your life need to increase. And that also means your premium will increase, keep increasing. So every time your income increase, you last time in our last time session, I do mention, don't simply commit when your income increase. You must always think your insurance first. When you commit anything, you need to think of insurance first. I buy a house. Okay, this house I'm going to take 1 million loan. And aside from whether I afford the loan installment, you also need to think whether I afford to buy 1 million of insurance, right? And then when come to after 50, your kids getting grown up already, go university already, and then your loan also coming down, loan amount coming down towards finishing, then your life protection also can be reduced, then your premium also reduced. Also like critical illness, when you have saved along the way, you save enough your money for your retirement, for your all purpose, then your critical illness also may not need that much. Okay.